Good evening, everybody. Welcome to part 2 of the July 14th, 2013 Trade and Market Update. Before we get going, I'd like to remind you that any information contained in this presentation is for educational purposes only, and we're not broker-dealers or financial advisors and are not providing specific trade recommendations. Also, any trades and or results covered in this presentation may or may not be live trades. In the event they are computer simulated, we will do the best we can to accurately represent them, and also that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Okay, let's take a look at our July M3 position. As of Monday morning, we were in this position where we had 2 long 880 puts, 10 long 910 puts, 4 short 930 puts, 10 short 950 puts, 3 short 990 puts, 2 long 1000 puts, and 3 long 1020 puts. And we had 1 long 890 call. Our delta was at about minus 43. And we had a gain of approximately $2,300. And this is what our analyzed graph looks like right here. And as we come into expiration, one of the things I like to do is try and keep this fairly close to the tent. And I want to keep my delta a little bit more positive when I'm outside my tent area to help stop from theta loss and vega loss out here at the 1020 level. So what we did here is we sold to 990, 1000 verticals, and you'll see if we go to the end of the day that now all we have is 1 short 990 here. The longs are gone. Here's our new position. Our delta is still looking good. Our theta is good. Our vega is good, although I would like more negative vega, more positive theta at this point. But like I said, the market's running like crazy, and we don't want to take on too much downside risk. So this was looking pretty good right here. If we move ahead till Tuesday, the market continued up. So what we did is we sold a put condor. It was a 910, 930, 950, 970. We sold 10 of those put condors. And what that did is it rolled our 10 shorts from 950 to 970, and it rolled our 900 longs, our 910 longs up to 930, canceling out some of the 4 shorts we had here at 930. And this put us in a position where we are once again minus 31 delta. Our theta is a little bit better, and our vega is a little bit better. In addition to that, I also bought 2 10, 20, 10, 30 put verticals right here to move our some of our long puts up to 1030. And that made us so that our position looked like this. And even with the continued up move, you can see we're basically in the same place of our 10th that we were before. We basically just took this whole thing and worked it forward. Right now our Greeks are good, everything's fine. Would be nice if we actually get our small pullback. We still have plenty of downside protection. Don't have much of an issue if we take off too hard to the upside. So from here, we were hoping for the market to come down a little bit. If we go to Wednesday, the market did not come down. So I ended up selling a 990 1010 put spread, and you notice our 990 shorts up here to 1010. Again, that was just a delta correction technique, and I wanted to keep our vega negative because our vega was going positive. I wanted to keep our delta relatively flat, and I wanted to keep our theta up where I wanted it here, and this is what our position looks like now. You see I'm gradually pulling the upside risk off the trade. And if we go into Thursday, as you know, the market continued up on Thursday, and what we did here is we sold our 890 call, so that's gone, and then we took our 1030 puts that were up here and we rolled them back to 1000, and we also sold 110, 10, 20, 10, 20 put vertical to cancel out the other long put that was up here, and that put us into what I call a lockdown position, where I take my upside risk completely off. And right now, if the market happens to pull back at a large amount, then we may end up making a little bit more money. Even if it pulls down in anywhere under 1,000, we may end up taking in a little bit more money. But basically, the trade is locked down. I plan on expiring it right here unless we get a very hard down move, in which case we'll take what we can get here, and possibly to real close to the end of the week, we could get something decent out of this still. But as of right now, it looks like we're going to close the month out at about a 5% profit after expiration. So this is locked down, and this is the current position as of today. If we shoot up into Friday, here we are. So basically we gave up chasing it. The market is just too insane to the upside, and there's no point in chasing any further. We're just going to take what we can get. If we go over to the July rock trade, as of early Monday morning, we had 10 970 butterflies on, we had 10 10 10 butterflies on, we had 4 1030s. If we take a look at our analyzed graph, this is what it looks like, and what we typically hope for here is the market remain fairly stagnant or creep up slowly. As we know, it did not creep up slowly, it creeped up very quickly. Our delta early in the morning was starting to be a problem with the gap up on Monday, and therefore we bought in the morning 6 980, 1030, 1080 butterflies, and by the end of the day, we were fully scaled into the position and looking okay. As we went into Tuesday, of course, we had a continued up move, and in the morning on Tuesday, you can see our delta was climbing with the movements here, and at the end of the day, this is what we look like on the analyzed graph. Everything is still going fairly well, and delta is minus 197. Our theta is still really nice here, really nice, and our gain loss is still doing fairly well. By Wednesday, we know the market continued up. We ended up selling off 3 of these 970 butterflies here, bring our delta down, and I really should have brought it down a little bit further than this even, but I brought it down to minus 225. It should have been down to minus 180. However, I'm thinking the market is up so much that it's likely to stall here, and as you remember, I thought we may get a fairly decent pullback this week, so I let the delta climb a little bit more than it should have. Here's what an analyzed graph looks like at this point. Should have pulled this last 970 butterfly off, probably scaled into a couple of 940s here, but I did not do that. If we go to Thursday, we had a really big up move on Thursday, and again, some of these adjustments are done intraday. But basically what happened here is I sold off my last 930 butterfly, my last 970 butterfly. I bought 5 1050 butterflies in the morning, and then I bought 5 more in the afternoon. And now we are fully scaled into a bearish butterfly position. The very large move here, close to expiration, put us down some money. Actually peeled about $3,000 out of the trade, so we're slightly negative here. But the position looks quite nice should the market start to slow down. And if we go to Friday, we had a further continued up move, and I ended up selling 3 of our 1010 butterflies. So if we shoot to Friday night, because the move did start to slow down, some of the money came back into the trade, and we're going into the weekend at about break even. My negative delta, again, I'm leaving a little bit high. Last time that hurt me. This time we shall see. Like I said, the futures are up now. However, the market is overextended. Chance of we're not going to hit maximum loss in this trade. Certainly not to the upside, unless there's some sort of market crash. But we may end up taking a break even or a small loss for the month if the market keeps going up. Of course, if it settles back here, then we're so close to expiration that this is going to the money's going to pick up in this very quickly, and we could probably easily get $5,000 to $10,000 out of this. I don't know that we're going to hit profit target this month, but it should be a decent month here. All right, let's go over to our last trade that we're going over, which is the July bearish butterfly. This trade here has been doing very well pretty much all month. We were set up to take a really good profit this month, and because of the excessive movements in the market, we haven't been able to do that. We've been up $10,000 or $12,000 for quite some time now. And as of early Monday morning, we were here in our 990 and 1010 butterflies. Our delta is way over our into expiration guidelines limits. So in the morning I went ahead and bought 8 to 1030 call butterflies. So if we come to the end of the day, this is our position. We did lose some with the up move. Our delta is about minus 250, which is how we like to go into the overnight on a position this size. And here's what our analyzed graph looks like. Everything's looking perfectly fine. If we go to Tuesday, we got a continued up move, and I had to add 2 more 1030 butterflies and pull off 6 of our 990 butterflies. So if we come to the end of the day on Tuesday, you can see we're going into the overnight a little more delta negative than I would like. However, I had the same opinion I had with the ROCK trade, is that we're overextended, and I didn't think we were going very much higher. If we go into the following day on Wednesday, the market did go higher, so we ended up pulling off 3 more 990 butterflies. And we are now left with 10 1030s, 10 1010s, and only 3 990s. Come into Thursday, we had another large up move. Again, I'm more negative delta than I would like, but I wasn't that concerned about it because of the overextensions of the market. We come in Thursday, I ended up selling the last 990 butterfly and buying 10 1050s. And from here, we are essentially in the same position as our ROCK trade. You can see this day here, this close to expiration, very large move, very high gamma, took its toll on our profit and loss. It beat us up pretty good. Again, we're so close to the expiration that our theta is very, very high. All it's going to take is a day or two for the market to settle out, and the money will be right back in here. If we come into Friday, I ended up selling off 3 more of our 1010s because, as you know, the market went up again. So as of Friday, we are up about $8,000 on our Bearish Butterfly. Yes, I should have been out of this a long time ago because we were up at least 20%. We were only scaled in 1/3. We were 21 days to expiration. No excuse not to be out of this, but I just wanted to trade it into expiration. Because had the market been calm at all, this would have been a grand slam this month, and you have to go for your grand slams once in a while. However, that wasn't the case, so we're looking at, I would say, a bare minimum of a 10% gain here of $5,000 if the market takes off tomorrow. I'm only going to fight this so much coming into expiration. Should the market slow down, if you look at our current position here, then there's a good chance that we'll get our 10 to 50, 20 to 30% out of this. So we'll just have to wait and see how it goes. If the market, they continue to buy the market, then we're just in this irrational buying mode, and there's not a whole lot that we can do about that other than just shut our positions down if things get too bad. So that's the deal for all the July trades. I showed you the August Bearish Butterfly and the V Condors in part 1. And we are expecting a flat sideways market for the week. And if that's the case, we'll do very well. If we get a hard up move or a really hard down move, we're going to have to bug out of these trades and get what we can take whatever we can get. All right, have a great week, everybody, and I'll keep you updated with any changes. Thank you and good night.